Hey YouTube, what's going on? Chris here. I want to bring you all an update on Litecoin. Right now we're at $55.70. We're down 0.18%. And what I'm going to talk to you about today, guys, remember I'm not your financial advisor. What we're going to look at is if this is a good place to potentially take a long for Litecoin. And what I'm going to do, I'm going to get into some reasons why it may be and why it may not be. Okay, we're going to get into all this here. If you guys like these videos, like, subscribe, hit that notification bell. That's all I ask you to do here. Come on here, try to do the best that I can for you. And guys, what I'm looking at here, just to be honest with you, like I said, I always want to be honest. If you want to go, here Litecoin's going to $1,000 by the end of this year, there's plenty of channels out there for you. But I want to be honest to all the people who've been here with me for a long amount of time. Since I started this channel, we were always looking at Litecoin and everything. Number one, I want you to know fundamentally, I love Litecoin. I think Litecoin's a great project. But what I like to look at now is technical analysis, and I like to put the trends and the odds in my favor. I'm not so much a fundamental investor. I'm more of a person who trades off the price action now. From all the stuff that I've learned in charting, that's just where I'm at right now. So if you're a long-term hodler, investor, or anything, this isn't, smashing on you. This is just me saying what I'm seeing in terms of technical analysis right now. So first of all, guys, what I wanted to point out here was we're in a downtrend. As you can obviously see, take a look at this trend line right here. So when you think about taking a long, you don't want a long when you have an overhead trend line like we're having, or resistance at that trend line, guys. That's the number one thing. So that's a reason why, for me, when I take a long, I want to have confirmation. I want to see the technical signals be there for me, so I'm not just trying to catch falling knives, especially with Bitcoin now trading below the 200-day moving average, which is a key factor for us, guys. We really have to pay attention to the fact that we're under that 200-day moving average. We need to get up above that as soon as possible for Bitcoin. We're having candle closes below it, and that's not a good thing for long-term health, in my opinion. Next, what I wanted to point out to you is we're looking at this 20 EMA. Okay, this has been very, very good moving average for us to look at the cryptocurrency market. And typically, guys, what you have here, when we're in an uptrend, we're trading up above this 20-day EMA. You can see a couple times we dropped down below it, but for the most part, we were up above it this entire uptrend here. And what I like to look at, guys, just to give you, when I say I'm looking for confirmation, this is what I'm looking for. Do you see this big volume and a candle close up above this 20 EMA? That would be a beautiful spot to get in there, guys. Okay, so that's confirmation. And you even had the second day with the candle close up above it. So that's your confirmation. Say you got in here, guys. And what you like to do, you want to ride this until you see a complete candle close, one or two, below that 20 EMA. So this would have been the spot to get out all the way from here. So say you got in on this second day, that's at $43. The time to get out would have been at $78. That's a heck of a move, and that's what I'm trying to get. I'm not going to drill the bottom. I'm not going to pick the top. It just doesn't happen much, guys. What I want is that big chunk in the middle. And if I do miss the first however many dollars or whatever, that's like an insurance policy for me, so that I know that I'm riding the trend. I want to align myself with the trend, and right now the trend is down, so you have to be very careful, guys. That's what I'm trying to point out to you. Okay, so now as we go on with this, and I'm using this for you as an example so you can see. Okay, so we sold out here. Now what we're looking for is another nice candle close up above it with a following day candle close up above it. So this wouldn't qualify right here, guys, because we had a bearish candle the next day that closed below it. And now what I'm looking at is this next spot right up here. So this would have been confirmation right here, guys. Even the next day we're still up above it. So say you even entered on that spot right there. The next time that we had a significant candle close was all the way up here. So say we got in at this area. This is, yet again, we'll say even halfway through that candle, guys, at 82. We would have sold out here at around $126. There's another big chunk, another big profit. Now let's take a look at the downtrend that we're working in here. Okay, so each time we've had a reaction back up to it, we've gotten pushed to the downside. We've reacted back up to it, push to the downside. You can see how this continuously happened for us, guys. And then right here, now this would have been a fake out for us. Okay, so we see this candle close. People could have even went off that one or the following days. We're riding that up. We're still in this until we close back below it right here. So this one would have been almost more so of a break even type deal for you, and you're going to have that as well. That's sometimes that, that's the cost of doing business. But what I'm looking at right now is the simple fact, guys, that we're trading below this 20-day EMA. So say you take a long right now and you say, all right, I think this is the bottom, I'm going for it, right? you're going to have this 20 EMA acting as overhead resistance. You're going to have this trend line acting as overhead resistance. And then we're also going to have this point right here, guys, that's acting as overhead resistance. And that's going to be at around $63.61. This whole chunk here that we had, guys, where we were fighting and we were trying to reverse the trend in the short term, and then Bitcoin dumped and we just dropped to the downside. Because this very well could have been an area where we pushed up, we back test this 20, and then we got out of there. But since we're so correlated to Bitcoin, it didn't happen, and Bitcoin dumped and we ended up dropping to the downside. So that's what I'm saying. When you try to take a long in the position that we're at right now, and this isn't looking at indicators, anything, this is just strictly going off price action. When you look at this and you're seeing all these factors, this whole area, let's draw a box here for you, because I really want to teach people this stuff. I'm so sick of seeing people where they'll take a long and then, you know, they don't use a stop loss or anything. And before you know, you're looking at this massive loss and you say, okay, I'm just going to keep holding. I'm just going to keep holding. And the price just keeps going lower and lower and lower. And guys, that can cause a lot of depression for people. I've really seen it. People have written me comments about that, and I don't want people to go through that. And I definitely don't want people to go, oh, I'm buying Litecoin because it's going to $1,000 by the end of this year. Guys, that's just not how stocks typically work, or these coins typically work. Okay, so right now this would be the area of resistance. Let me turn this red. You can see this big chunk here. Okay, right there. Let me get red on. Okay, so we have this overhead resistance that we have to deal with at 63. We have to deal with our 20 EMA acting as overhead resistance, and then we also have to deal with this downtrend. So this big chunk here, guys, is going to be overhead resistance. Now, am I saying that we have to just drop to the downside here? No, everything's going to be correlated with Bitcoin. If Bitcoin gets a nice little bounce up to 9,000, a little relief rally, then Litecoin could definitely come up and test these areas around like $63, $64. But sometimes, guys, you can get a reaction where you come up here and then you actually end up falling down farther, because what we've been having is lower highs. You see the lower highs and lower lows, and what we've almost been looking at is this little wedge pattern. And remember, everyone goes, okay, it's a falling wedge. Yes, we're going to break to the upside. Guys, that is not always the case. So we'll just do a rough little one here. We can maybe even do this to get more touches, about right in there. Okay, so a falling wedge or any chart pattern, it's not confirmed until you actually have confirmation. So for this to be a true falling wedge, we would need to break out from this upper trend line, have candle closes up above that, and start to make the move. Then it would be considered a true falling wedge. So a chart pattern is just a pattern until there's confirmation right now. Okay, so that's another option too. We could come up and test this area again and see if we break out, or if we're going to see rejection, then pop back down for another lower low. But what's so difficult that we're seeing right now, guys, take a look at these moving averages, okay? And moving averages, they tell you the trends. It's all about chasing the trend, in my opinion. We're trend chasers, okay? So on the 20, we're down, right? Now let's go to our 50 moving average, which is very important. You can see that's acting as overhead resistance. We've been below it now, trading below it since the 10th of July. We lost it, and since then we've just been getting slammed to the downside, right? Then the next one is our 200-day moving average, which is our long-term investors moving average. And what you can see here is that's acting as overhead resistance, and we had that death cross as well, which has pushed us to the downside. So when people say moving averages don't matter and it's all just about, you know, the fundamentals, guys, yes, fundamentally I think Litecoin's going to do great in the long run, but right now, you know, we're looking at a tough spot here. You want to be going long when you're up above the moving averages. You don't want to be going long when you're below them. If anything, you'd want to be shorting. What guys would be doing is shorting off this 200-day moving average or this 50-day moving average, some even off that 20-day moving average. Depends on the length of time that you're trading for. But, you know, guys, the trend right now is down. So if you're trying to get into a long position, jump into that long position, but use a tight stop loss so you don't get wrecked. So if you're wrong and it's not the bottom, it can drop to the downside and you get stopped out and you don't lose that much. So like right now, it'd be a tough risk to reward because there's so much overhead resistance right now, you know, playing a factor for us. And guys, whenever you're below that 200-day moving average, that's a bearish thing. I mean, you can see we have been trading below it now since August 10th. So it's getting more and more comfortable to the downside, guys. And that's the problem that I have right now with potentially going long for Litecoin, you know. And guys, another thing I like to look at is the Fibonacci. So if we go from our swing low up to our swing high, we've dropped down through that 0.618, which is a spot that you typically would want to see some type of a bounce on, guys. A lot of times you'll get a bounce from the 0.618 up to the 0.382, which would have been around that $98, but that didn't happen. Bitcoin broke down, we broke down. So that's why I'm really watching Bitcoin hard, guys. I'm paying a lot of attention to Bitcoin because I believe it's going to control what Litecoin does as well. And if we go to Bitcoin right now, and like I told you guys, see, this is where I was catching some falling knives here, taking a little risk. Okay, so I got into a play at $7,900. I'm still sitting in that play right now, and what I'm looking for is just that little relief rally to come up here and test that 200-day moving average. And if I'm getting in at $7,900, guys, and it comes back up to $8,700, that's a nice profit. But I'm still anticipating, guys, if we don't start closing above that, then we could get pushed down to the downside, and that's why I have my stop loss in, or that's an area where I would take profit. You understand that? So like for Bitcoin now, we're trading below all these moving averages, guys, and this is where we don't want to get trapped. We're having true candle body closes below it, and that's significant. Now, on the bullish side, we saw these, tweezer bottoms here, guys, and typically when you get those longer tweezer bottoms, you will get some type of move to the upside, and maybe that's just to test the, the 200-day moving average, or if that's actually to come up here and test the bottom of the triangle where we broke out of. But what we need is big volume, and we need to get moving, guys. If this is going to be some type of a busted pattern where we come back up and break out through the top, it typically happens in about 9 to 14 days. And right now, since our breakout, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 days. So we really need to get moving here so we don't get trapped underneath this 200-day moving average, guys. In the bull markets for Bitcoin, constantly what we've been up above this 200-day moving average, guys. It's only been in bear markets that we've traded below it. So, guys, that's what I'm trying to bring to you here. I'm not trying to put on a wizard's hat and saying, oh, Bitcoin's going here, Bitcoin's going there. I'm going to look at this from the technical standpoint. If Bitcoin does this, I'm going to do that. If Bitcoin does this, I'm going to do that. And you have to have a plan for the upside and the downside. I don't want to see anyone get wrecked. So, guys, that's what I'm going to bring to you right now. I would not personally, and this is not financial advice, I would not be personally trying to jump into some type of a long, like on Litecoin, unless you have a very tight stop loss and you have some type of reason to why you believe it's going to have a nice little bounce back. But always protect yourself. That's what I'm trying to tell you. You cannot be in this game if you don't protect yourself. And as you go even through, the crypto market or the stock market, guys, I trade stocks too. There are some stocks where I've seen them go from $400 or $500 down to $4 right now. So things can get so overextended to the downside and so overextended to the upside, and where people go, okay, Bitcoin can't drop below this area. Guys, it most certainly can. Anything can happen in this space, and that's why you have to use stop losses. My biggest losses I've ever taken are when I don't use a stop loss, and I don't want you guys to have that, same fate as well. I've learned from a lot of my mistakes, and that's why I play small positions. So if I do make a mistake, it is what it is, because I'm still trying to learn this stuff, guys. So like right now, I'm sitting in that Bitcoin position from $7,900. I have a break-even stop. If we go below that, I broke even. There's no harm. I look for the next spot to get in, and that's trading. Guys, things can change so fast. So that's what I want to be here for you. I just want to be a real guy, show you what I'm looking at. But right now, the trend is down, guys, and you have to be very careful. So if you like these videos, like me being real with you, like, subscribe, hit that notification bell. Appreciate you all being here, guys. God bless and take care. Be safe out there.